markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
It's 3:41 on Wall Street. We check the markets all day long at Bloomberg. The Dow, the S&P, NASDAQ, all in the red. Little change, though. That is the key takeaway, with just about 20 minutes to go ahead of the closing bell. We are also minutes away from the latest numbers out of Tesla. William McDonough is founder and CEO of Element Funds.
I think what we're going to see from Tesla when they report today, we might not see Musk. I think they're starting to realize that maybe he isn't the optimal person to do the SEC communications, much like Apple did with Steve Jobs back in the day. Let's throw a black turtleneck on this guy. Let's put him on stage. Let's talk about the Cybertruck. Let's stop all these communications with regulators. That ain't his highest and best use.
And again, we've got Tesla shares up by 0.3%. Not the only big deal after the close of trading. We'll also be hearing from IBM. Ahead of that report, we do have IBM shares down now by 0.6%. IBM, Tesla, we have got you covered as those numbers break. S&P right now down 3, drop there of 0.1%. Earlier in the hour, the S&P was higher briefly. The Dow also just a couple of minutes ago higher, down now by 14 points. Little change there. And we have got NASDAQ down 28, drop there of just about 0.3%. 10-year yield 3.45% right now. We have got the 2-year yielding 4.13%. Spot gold up 0.4%, $19.45 the ounce. West Texas Intermediate crude oil up 0.5%, $80.55 a barrel. Again, we're on Tesla Watch big time. Tesla up now by 0.3%. And that is a Bloomberg Business Flash.
Hey, thank you so much for that update, Charlie Pellet. Really appreciate it. Bloomberg Business Week is brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds. Thousands of small businesses benefited from a payroll tax refund and beat the odds of shutting down their organizations. This refund is not a loan and could help your business weather rising inflation and supply chain issues. Learn more at getrefunds.com.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, just about 17 minutes left in today's trading session. I heard Charlie breaking down the numbers. He's been on the market turnaround, still in the red for the S&P, down at NASDAQ, but definitely off its lows of the session. But, you know, we're kind of driven from data point to data point and earnings release to earnings release. We've got some big ones after the closing bell.
Yeah, but is there something bigger happening, and how do we kind of draw all these earnings and the results together? For that, we turn to Jimmy Lee, the founder and CEO at the Wealth Consulting Group. It's an independent wealth management, registered investment advisory firm. They've got about $2.9 billion in assets under management. Jimmy joins us once again on the phone from Las Vegas. Jimmy, how are you?
Great. Thanks for having me on.
Yeah, it's good to have you back with us. Okay, let's take a step back, not talk about earnings yet. I just want to get your views on the macro and the landscape that you're seeing, because I don't think we've been able to speak to you yet in 2023. What are you seeing as you look out?
I think what we are going through now is a shift from just a few weeks ago, from a lot more of the pundits believing that we're definitely going to be in a recession in 2023, and it's just not knowing how deep it's going to be, to where I think a lot of those bears have turned more bullish, thinking that we may actually avoid a recession. And so I think that the negative sentiment, although it's still very, very high, is a little less than what it was just a few weeks ago. And I think that's what we're seeing. So I think, good news, you're seeing money get put to work into risk assets such as equities, and also fixed income and bonds being a good place for investors this year, as many people think rates are going to stabilize and then go down at some point.
Yeah, it does seem like the conversation certainly has shifted over the last few weeks. But what do you think? Are we going to be able to pull this off?
Well, my base case has been all along that we could avoid a recession. I wasn't in the camp of we're definitely going to be in a recession. And, whether the Fed raises 50 or 75 or maybe even 1%, I don't think really that it matters that much. It's more about, are they going to, pause at some point, and when's that going to be? And certainly it's going to be in the first half of this year. Some people like myself think it could be as early as March. And if that happens, that would be a little bit of a surprise, and I think that would help, fuel this rally that we're seeing in stocks.
What makes you think, or what signs are you seeing that inflation maybe comes down faster than many expected?
Well, I've been kind of talking already along, or the last few months anyways, about, and last year about just how big housing and shelter, which was the problem in last month's report, right? How big of that is a part of core CPI, nearly 40% of core CPI. And I think it's been well reported now that, the BLS collects that data with the rearview mirror, and everybody knows that housing market and rents have kind of stabilized, and it's been tough in the housing market. And so, when that data eventually gets into the inflation numbers, at least the headline numbers that the Fed's looking at, I think will look a lot better. And I think they'll be able to pause, and then I think that there's even a chance that they could lower before the end of the year.
Why do you think that they would lower? They've come out and said, as of last month, that they don't plan to lower.
You know what? I agree in terms of the sentiment, not the sentiment, the statements, and what people are listening to from the Fed members about how hawkish they're sounding. But, I think they can change that. So if we get weakness in the economy in the second half of the year from the high interest rates, I think that that would be the main reason that we could see some weakness, maybe even in the labor data down the road.
Jimmy, I'm looking at the notes you shared with our producer, Paul Brennan, and, the things or areas that you would be overweight in include something that shows an economy that's either turning around or is already turned around, and that's energy, industrials, materials, and financials. Is that safe to say that that's why that's your play, because you don't think we're going to be in a recession, and that you do think inflation will come down and that the Fed stops sooner rather than later?
Yes, and I also believe that China is a big part of a global growth story, especially for the Asian countries. And I think China will end up being a net positive for global growth this year. And so, yes, I think that that we avoid a recession, at least that's what I hope, and that I think a lot of asset classes, equities, fixed income, and real estate will have a nice bounce back this year. I still think we're going to be volatile for the time being, but, investors need to get positioned ahead of the pause. I think by the time, those words come out of Powell's mouth, I think stocks will be higher, and that's the main reason.
Okay, so new client comes to you with a bunch of cash right now. How do you deploy it? I know it depends on their age, what their goals are, but how do you time? You can't time the market. We know that. How do you time the investments?
It's very difficult to time the market, but history has shown that in any given 12-month period, literally any given 12-month period going back, 75% of the time, the stock market's higher. So it's very difficult to not, want to put the money to work knowing that. But usually we'll take the cash and add some into the portfolio that we want to invest into fairly soon, and then look at deploying the rest depending on what's going on in the recent news that we're headed against. And so, I'd say maybe like a half now and half over the coming months type strategy is typically how we would do it, unless there's some sort of an event that we're watching out for and we'd want to wait for that.
Jimmy, just got about 45 seconds or so left here. Does it matter if the real inflation rate that we get back to is not, or in the Fed funds rate that we get back to is not 2%, that the run rate is higher, whether it's 4% or so, even 3%? Does that matter in terms of investment strategy for you?
We're nearing the point where the Fed funds rate's crossing potentially, where inflation is, core CPI. And so now we're getting to a point where rates really can be restrictive and can work on inflation. And so I think, once we get inflation lower than where the Fed funds rate is, I think then we're going to be just fine. And so now, will that change Fed speak? I don't know. But I can tell you that I think there's a lot of money sitting in cash and money market funds and CDs that's waiting for a brighter outlook. Because still, even though that the sentiment has moved a little bit more positive over the last few weeks, I think that the negative sentiment is still pretty bad out there, and that's what people are hearing, at least retail investors are. So, but for us, I think that, the rates that we're getting to now is a more comfortable place.
All right, going to leave it there. Hey, Jimmy, thank you so much. Jimmy Lee, founder and chief executive officer of Wealth Consulting Group, $2.9 billion roughly in assets under management, joining us on the phone from Las Vegas. Just got About 10 minutes left here in the trading session, and we're just off our high. Still in the red, though. Lots of earnings to come. This is Bloomberg.
company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Tesla will be among the big names reporting today after the close of trading. Tesla shares ahead of that report. They're up by 0.3%. Investors badly bruised by last year's 65% rout in Tesla are looking for clarity from today's earnings report on demand for its electric vehicles, how recent price cuts will impact profitability, and how many cars the company plans to make in 2023. So Tesla ahead of that report, up by about 0.2%. We've got complete coverage on Tesla coming up right here on Bloomberg. Also reporting after the close of trading today, IBM shares right now, they are trading lower. IBM down by about 0.7%. Bank of America is sharing the wealth with employees, and with that story, here's Bloomberg's Steve Rappaport.
Bank of America will reward the majority of employees with a pool of restricted stock. CEO Brian Moynihan in a memo says the incentive goes to staff who earn up to $500,000 a year in annual pay. According to the memo, a limited number of employees will also receive a cash bonus based on compensation and local requirements. A company spokesperson says this is the 6th year the firm paid such awards, now totaling more than $4 billion. In New York, I'm Steve Rappaport, Bloomberg Radio.
Boeing reported a surprise loss to end 2022, its sixth straight money-losing quarter, as higher costs slowed the plane maker's recovery, even though a late flurry of jet deliveries drove a surge in cash. Boeing right now up by 0.3%. Those are the company stories we're following. This is Bloomberg.
This is Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
All right, you are listening and watching Bloomberg Business Week on this Wednesday. Carol Masser along with Tim Stenivek in our Bloomberg Interactive Brokers studio on YouTube on Bloomberg Quick Take. Just a few minutes, we're going to head over to our TV colleagues, talk about the market close. What we really care about, though, is earnings, and we'll get into them. We've got a lot coming, including Tesla and IBM after the bell.
A couple stories I wanted to get to before then, though. Bank of America is granting the majority of its employees with a pool of restricted stock, boosting compensation to retain workers in an otherwise gloomy economic environment.
Yeah, our team here at Bloomberg, the newsroom, we've been talking about this. The incentive comes on top of regular compensation, goes to staff who earn up to $500,000 in total annual pay. This is according to a memo from the CEO, Brian Moynihan. About 96% of the global workforce is eligible for the reward. So here's what's kind of cool, too. This is the sixth year the firm has paid such awards, which now total more than $4 billion, according to the memo, and a company spokesperson confirming this. This is one of holding on to talent.
Exactly. You know, we talk a lot about the changing labor market, and if we start to see companies stop doing stuff like this, then it's a sign that, you know, it's not as hard to hold on to that talent. But we've also heard the term, labor hoarding as well throughout this economic cycle, Carol. Employers are scared to get rid of workers.
We talk about this. It's really expensive. If you lose a worker, have to, take some time to pay either someone to help you recruit somebody to the firm or just go through that process and then bring somebody in training, especially for a financial firm, or any firm. It's lost productivity. In the meantime, also, we started talking about some News Corp headlines after the close. They're not going to do another recombination, if you will, of News Corp and the parent, but Rupert Murdoch's News Corp is, though, in talks to sell its Move online real estate business to CoStar Group, worth about $3 billion, according to people familiar.
Move is the parent of Realtor.com and other real estate listed websites. The deal is worth about $3 billion. That's according to people familiar with the matter. They asked not to be identified because the discussions are private. This sale could be announced within days, according to one of the people.
Yeah, so kind of interesting. I do feel like you're hearing increasingly of people somehow off-siding anything to do with or getting rid of things to do with real estate. And so it's interesting to see what they have to say. Although this is, their online real estate business. So maybe that says something about where we are going in terms of the economy. Lots of questions about that. All right, no questions or concerns. It seems like maybe in the market at this point, much more of a risk-on attitude. But let's see if the earnings after the close change that. Right now, we're going to head over to our TV colleagues Beyond the Bell. It starts right now.
Pockets of the market. We move closer here to the closing bell. We're about to take you to the bell and beyond.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now we are about 2 minutes away from the end of the trading day. Romaine Bostick and Katie Greifeld counting you down to the closing bell and are here to help take us Beyond the Bell. It's a global simulcast with Carol Masser and Tim Stenivek. Welcome to our audiences across Bloomberg Television, Radio, Quick Take, as well as streaming on YouTube. Carol, what do you got?
What do I got? What a different tone right now. And I do wonder how the earnings that are coming after the closing bell can once again impact sentiment. I do feel like we are driven from data point to data point, from earnings release to earnings release. We'll see what Tesla and IBM and all the others, what they do to the tone here.
The focus is certainly on earnings, but we still got some good macro comments from one of our guests earlier in our program, Jimmy Lee, the founder and CEO of the Wealth Consulting Group, saying that, hey, he thinks that we could avoid a recession, and he does think that the Fed is going to pause in the first half of this year. Yeah. He thinks it'll be March when the Fed pauses.
What do you guys make it, though, too, of some of the industrial earnings that we got, which were pretty bad, and the reaction to them were bad, whether you're talking about 3M or some of the railroads, and, of course, I think later today,
not good.
We get a couple, not
good.
Yeah.
That's the real economy, right? Moving things around, telling us whether there's demand. I think it tells us a lot.
I'll be honest, I'm a little surprised to see the change in tone in the market. I couldn't point to one single thing that actually moved stocks higher. I mean, I thought this was going to be a day where the S&P 500 finished down 1.5%.
I think a lot of it was Microsoft. Of course, Microsoft did finish 1% lower, but I don't know. For a while, it looked like if you laid Microsoft over the NASDAQ 100, the intraday movement, that they seemed to match up almost perfectly.
Yeah, there was certainly a flip-flop there, whether it was just valuation call or not. Microsoft down about 0.6% here on the day. Earnings after the bell, Tesla, IBM, Packaging Corp, ServiceNow, Lam Research, and Las Vegas Sands, to name a few. Dow Jones Industrial Average going to finish the day basically unchanged. We're going to call it down less than a point. The S&P 500 down about 1 point itself. Call that unchanged. The NASDAQ Composite down 22 points or 0.2%. And the Russell 2000, Carol, right now is going to finish the day higher by 0.2%.
Go figure about that. Looking at the S&P 500, 287 names are higher in this session, 215 lower. And Katie, we've got one unchanged.
And we look at the industry groups, it's a pretty even split. Once again, you have telecom up top, the banks too having a pretty good day. You look at the bottom, the transportation industry group, utilities, media and entertainment, all leading the way to the downside, Carol.
All right, let's get to some of the gainers in today's session as we await those earnings. ASML Holding, this one was up about 1.7% by the close, even though the CEO had some warnings, some concerns about some of the tensions between the U.S. and China, about chip controls and what it could mean. But ASML did come out and forecast better than expected first quarter sales due to strong demand for its advanced chip-making machines. So that is an interesting trade. And remember, we've got Lam Research also playing in the chip sector. That will come out after the close. Right now we have CSX. Do we want to go to it?
Yeah, well, we'll hit it. You mentioned it. CSX 4Q EPS coming in 49 cents versus a 47 cents estimate on average here. The revenue 3.73 billion here, and that looks like that's going to be pretty much on the nose of what the street was expecting. Operating income 1.46, again there on the nose.
Yeah, I'm looking at in details in the company's press release for any commentary about the economy. Remember, we got some railroads underperforming today as a result of other companies that reported, like Norfolk Southern, for example. Yeah, shares finished the day down significantly lower as a result. This company coming out, CSX, saying that the team made great performance and progress this quarter, delivering strong earnings as our network performance continued to gain momentum. With the right resources now coming into place, we can turn our full attention to the opportunities ahead in 2023 and beyond. This company's CEO saying that they're going to win share from trucks and drive profitable growth over the long term.
Not too much movement in the shares, though, after hours. I see unchanged. Maybe that's an error on my screen. But you look at how shares have performed over the past year, only down about 8%, so outperforming the S&P 500.
Well, but it's interesting, and we'll look for some more commentary as these numbers come out. And, from all of the companies, what they have to say about what kind of transparency they have, what kind of outlook, visibility they've got remain.
Well, but going back to Norfolk Southern, because I thought it was interesting, even though those shares got hammered today, the commentary actually wasn't that bad. And a lot of sell-side analysts really came out and pointed that, saying that the company really wasn't saying end demand, meaning the consumer was really the issue there. There was, I guess, more incremental issues that they have to deal with. But they seem to think that these companies are going to be a little cautious, of course, with that guidance. That doesn't necessarily mean that the sky is falling. It's just that maybe they don't want to go too far on a limb and say everything's going to be great.
It kind of brings us back to our conversation that we had with Mario Cordero over at the Port of Long Beach earlier. I know you guys spoke to him as well.
Yeah.
He said 0 ships are out there waiting to get in. It's a return to normalcy. He did say the economy is slowing, and that's what the Fed wants, but he was short of actually calling a recession. And he was like, things are almost back to normal.
Yeah, and I love Mario, but I do wonder that when you see that drop in imports and import traffic, whether we should be a little more concerned about it.
He wasn't alarmed. He wasn't alarmed.
But he did talk about that containers were being canceled because of the import traffic coming down. So I do think that's interesting. We talked about Capital One Financial, which was out after the close. It gained in today's session, but it did because the company is putting aside more for provisions. And I thought that was interesting.
Yeah, I thought the market reaction to that, I was like, what? But I guess it makes sense, right?
But they're being careful, ahead of it.
Careful. But maybe that's what gets rewarded. If you're careful now, and then if we do get through, and maybe we don't see this big economic downturn, then of course that means you have a lot of upside, maybe a couple of quarters.
Like cutting jobs, right? Maybe, and that's why some companies are being rewarded.
Yeah, it's
at
tough,
this point.
but sometimes that's what you have to do.
Exactly.
And what about the commentary? And but when you talk about the commentary of Satya Nadella, who addressed just that, this idea that whatever the new normal is for at least for Microsoft and its business isn't going to be like the old normal, and they have to operate at a slightly leaner level than what they were doing before.
I thought it was notable that his commentary seemed to push other companies down more so than Microsoft today.
Right, because they're not Microsoft.
Exactly. Shares like Alphabet. Alphabet reports next week, but shares ended up finishing the day down around 2% today.
Microsoft is a pretty well-diversified company. I know a lot of people don't look at it like that,
and still
but put that up against Alphabet and show me the diversification in Alphabet.
Still growing. CSX, by the way, sees 2023 capex about $2.3 billion.
Yeah.
The estimate was 2.08. So they're spending.
I
They're
got some
planning
more
to.
earnings for you.
Let's do it.
Let's Las Vegas Sands as we wait for Tesla to cross the wire. Las Vegas Sands crossing the wire right now. Their net revenue pretty much coming in slightly below estimates, $1.12 billion, versus an estimate on average of $1.18 billion is what the street was looking for. They did post a loss on an adjusted basis, 22 cents a share here. Not really seeing any guidance here, but the share is only down about 1% here in after-hours trading.
Yeah, remember, this is a company heavily reliant on Asia and businesses there, so travel restrictions.
Isn't Asia supposed to be doing? I guess we're going to find out after they come back for the Lunar New Year.
Well, the company's chairman and CEO said, well, travel restrictions and reduced visitation continue to impact our financial performance during the quarter. We remain confident in a robust recovery in travel and tourism spending across our markets and deeply enthusiastic about the opportunity to welcome more guests back to our properties throughout 2023 and the years ahead. So those travel restrictions over the last couple of years really hurting the company.
All right, back to the chip sector we go. Lam Research just crossing the Bloomberg terminal. Second quarter adjusted EPS. This is a beat, $10.71. That compares with the estimate of $10 even. Revenue, let's go to the top line, $5.28 billion. That too is a beat. $5.09 billion was the estimate. Right now, just early trades, Katie, we're just seeing the stock up about 0.1% here.
Yeah, not too much movement. It feels like investors are really parsing through this. And what gets rewarded in this earnings season? Not so sure. Haven't really seen a good narrative other than those cost-cutting measures that we were just talking about.
Yeah, and it's interesting to see, look at Lam Research's results, of course, against the backdrop. I think you mentioned it earlier with ASML, of course, out of the Netherlands. And the idea here that for the chip equipment makers, that maybe they're not necessarily seeing the sky is falling. And like a lot of them are sort of blunted to a certain extent by these sort of cyclical natures of the end product.
To that point, Tim Archer, the president and CEO of Lam, weighing in, saying that given the decline in wafer fab equipment spending expected in calendar year 2023, we are taking proactive steps to lower our cost structure and drive efficiencies across our global footprint while preserving critical R&D. Lam is focused on accelerating strategic priorities to capitalize on the semiconductor industry's long-term growth prospects.
This is all about margin protection, I feel like. You know, doing what you need to, whether it's cut workers, unfortunately, or cut costs, Katie. Like, companies are coming out and taking the steps, cutting back on real estate, doing lots of different things to maintain their cost structure.
Tesla earnings crossing the wire right now. Let's get right to it, folks. 4Q adjusted EPS, $1.19. The street on average was looking for $1.12. That's the main headline crossing the wire right now on Tesla. Going to take a little bit of time, of course, to dig through some of these numbers, guys. As we know, this is always sort of a complicated report here, but at least looks like on the headline figure, adjusted EPS beating slightly by roughly about, looks about 7 cents a share here on the 4Q adjusted EPS.
And it looks like investors are still deciding how to feel again as we await sort of the drip of information. We see that fourth quarter free cash flow was $1.42 billion. The estimate there was for $3.13 billion. So a bit of a miss there as we continue to watch these numbers roll in.
The big thing I'm really interested in seeing is just how much they were able to stoke demand by cutting prices, but more importantly, how much, if at all, that ate into profitability.
Yeah, and that was toward the end of the quarter. So, you know, I'm more interested on the outlook, given that, you know, Tesla has lowered prices across its lineup in different areas of the world. Shares down about 0.4%, 0.8%. The hard part about Tesla earnings, of course, is that the slide deck is 40 pages, and you have to go through that to get the numbers.
Well, some of the key numbers coming out, the great folks over at Bloomberg already got it down. The long-term 50% compound annual growth rate that Elon Musk has been talking about, they're sticking to it and expecting that they will remain ahead of that production target, 50% on that number, 1.8 million cars, Carol.
All right, I want to get to IBM because it's crossing, and here's the big red headline: to eliminate about 3,900 jobs. This is coming from the CFO talking about this in a interview. So its current workforce is about 260,000, a little bit of perspective, and also talks about the currency impact. 2023 constant currency revenue growth at mid-single digits. This is important, the currency impact. Analysts wanted to see how it was hurting this company or helping.
Yeah, the fact that the dollar has been weakening, it seems like shareholders seem to like, again, those cost-cutting measures that we've been talking about, those job cuts. Shares only up about 0.9% or so, but bouncing around.
Yeah, bouncing around here, and I think we get to this idea here of sort of how IBM has really tried to transform that business, and the idea that they at least see themselves as someone insulated from some of those outside pressures. The idea here of the cycle that they're in right now is a little bit divorced from, I guess, the on-the-ground economic conditions. Maybe that benefits them. venturing to see what they say on the call.
Well, to that end, Romain, the company's CEO, Arvind Krishna, IBM chairman and CEO, saying that looking ahead to 2023, he expects full-year revenue growth consistent with our mid-single-digit model.
All right, let's get back to the star of the show, and that is Tesla. Adjusted EPS looks like a beat. Cash flow metrics, free cash flow looks like it is a miss. The company's sticking by that 50% growth rate target and also saying that they have sufficient liquidity to fund their product roadmap. Joining us right now is Ed Ludlow, co-host of Bloomberg Technology. Ed, what jumped out at you in these earnings?
Yeah, I go straight to gross margin at 25.6% in the quarter because I know that's what the street were looking for. The forecast was for 25%, and they've got slightly above expectations on that, right? The reason we're looking there is because of the impact of price cuts, not just here in North America, but in China and the European market as well. Also, the impact of foreign currency, really interesting. On a top-line perspective, negative FX impact of $1.4 billion, which seems like a lot, but when you go to the bottom line, that negative FX impact comes in the form of $300 million. So there's some mitigation. The narrative here is really interesting. Very high up in this shareholder deck, Tesla are talking about a difficult and challenging macro environment. The focus, Tesla says right now, is cutting costs in different part of the business. How that translates, according to the company, is they are seeing profit growth in other parts of the business as well. But, you know, an interesting mix. Investors kind of seem like they're taking time to make their mind up, right, guys? We're bouncing around between a modest gain to a few tenths of a percent lower. We're now flat, all on the earnings call. How exciting.
And Ed, give me just 1 minute because we are getting some other earnings as well. This from ServiceNow. The fourth quarter adjusted EPS was $2.28. The estimate there was for $2.02, so that's a beat. You also have fourth quarter adjusted revenue coming in just over $2 billion, a hair above the estimate for just about $2 billion flat. Karen.
Yeah, that's knocked down about 6.5% as we speak. Back to Tesla we go. Another headline: to remain ahead of its long-term 50% compound annual growth rate with about 1.8 million cars in 2023. They also talk about the Cybertruck. Ed, you know, in terms of growth for this company, are we getting that in this release?
Yeah, I mean, the commitment to the 50% annual average growth rate is important because after we had those fourth quarter deliveries that came in below expectations, despite being another record quarter, a lot of analysts started to question whether over a multiple year horizon, 50% average annual growth was really possible. Well, Tesla's reiterated it in writing in this earnings statement. I'm just going to read you a little bit of what I was talking about earlier, which is that they are prepared for short-term uncertainty, which makes you think that this might be around the demand picture that we're seeing, particularly in China. They're also talking about their commitment to autonomy and energy solutions long term. And I know a lot of folks are sending me questions on Twitter for some of our guests later this evening in Bloomberg Technology. Can you ask them about the energy business and when that becomes a bit more of a star? Interesting if that's the case on the call. But as I said earlier, higher up in this earnings deck, shareholder deck, they talk about accelerating our cost reduction roadmap and driving towards higher production rates. Really interesting. They're talking about growing their footprint globally for production, even when there's questions about demand.
Ed, I know you're going to be all over it in just about an hour. That is Bloomberg Technology co-host Ed Ludlow. Joining us now for more insight on IBM, let's talk to Bloomberg Intelligence Chief Technology Analyst Anurag Rana. And Anurag, it looks like a beat on revenue. Of course, that's paired with an upbeat forecast and plans to cut about 1.5% of jobs. But beyond that, what sticks out to you?
You know, the number that I liked a lot along with that was increase the free cash flow guidance by $500 million to $10.5 billion. I think that is going to put some rest. A lot of people say that, you know, the company has been growing revenue, but free cash flow has been flat for a while. So I think that's going to be well. And I think that will give the company a little bit more flexibility to perhaps do an acquisition this year, something that they haven't done, I would say, in a few years now.
All right, Anurag, we're going to have to leave it there when it comes to IBM and head back to Tesla. We're going to go back to Tesla. We do that with Ross Gerber. He's the CEO of Gerber Kawasaki Wealth Management, certainly a longtime Tesla bull who has been critical in recent months of Elon Musk's attention and where it has been focused. Ross, always good to have you. You've had a couple minutes to check out these numbers. What stuck out to you?
Energy storage deployed up 152%.
Energy.
Margins weren't. Yeah, you know, this business is amazing. I mean, think about it for solar companies to be able to store energy in the megapack production and what the potential margins are of this business growing, you know, well over, you know, 3 digits now, so 150%. growth. So that's exciting. And then margins weren't like really dramatically impacted, although most of the price cuts were sort of at the end of the quarter. So we'll have to listen to commentary. But these are good numbers across the board. I have no issue with them, and Tesla's executing.
What about what's to come? Is that really the interesting part of this story? Is it the current business? I mean, they're talking about the Cybertruck on track to begin production later on this year. They're working on a next generation vehicle platform that's under development. Is that just the shiny new thing still, or is that real?
Well, that's a real shiny new thing that's coming hopefully by the end of the year or sooner. But I think also if you look at the numbers, they're now saying that both Berlin and Austin are up to 250,000 cars. So that's 5,000 cars a week. So that's also a piece of news that they were at about 3,000 cars a week. So they've gotten up to production levels that are scalable now in both Berlin and Austin. And I think that is really exciting. So when you really look out over the next year or two for Tesla, they have an amazing ramp business. It's quite amazing.
Let's stick with the cars for just 1 second here, Ross. I am curious here about the pricing on them. We know, of course, they trim prices a little bit towards the end of the quarter in order to stoke demand here. Do you think that they'll continue down that road here in adjusting the cost to make it a little bit more favorable relative to competitors?
Yeah, I mean, they trimmed the price a lot of it, and I think that it really, stoked demand tremendously, and I think they're pretty soon, will reach selling out of their cars. But I think this is all about the IRA laws being so confusing and Tesla wanting all their cars to qualify for the EV tax credit, which makes the car incredibly affordable to most people, which was ultimately Elon's goal. So right now, I think that's the big, sort of boogeyman out there is as production scales and costs decrease per vehicle in Berlin and Austin, what margin compression are we seeing from, let's say, a 20% reduction in price versus the cost savings that they're getting in the factory? So there is some margin hit for sure. I just don't know how much.
All right, we got to run. Ross, thank you so much. Ross Gerber of Gerber Kawasaki there. Looking at shares of Tesla up about 0.75%. Guys, CSX is up 1.3%. Yep. IBM is up about 0.25%. Anything here that kind of changed sentiment in your view?
Well, I would keep a little bit closer eye on some of the other semiconductors because I thought the fact that on semi fell on the back of those reports, Wolfspeed, which you don't talk a lot about much, which of course used to be Cree. So there is, I think, still some trouble in that semiconductor space. It'll be interesting to see what the reaction is when the cash markets open tomorrow.
All right, lot to digest certainly here in the aftermarket and certainly into the Thursday trade. All right, guys, that's a wrap. Our cross-platform coverage, radio, TV, YouTube, and Bloomberg Quick Take. Beyond the Bell. We will see you again, same time, same place tomorrow.
This is Bloomberg Business Week with Carol Messer and Tim Stenovec on Bloomberg Radio.
Wow, a lot of earnings.
Yeah, I mean, CSX is up 1.4%. This is, transportation, moving things around in contrast to what we got from Norfolk Southern earlier today. Tesla, it's up just about 0.5%. So, investors kind of okay.
They are, but here's something that kind of gives me a little pause when it comes to Tesla. The company right now is sitting on a lot of inventory, Carol.
Yeah.
They've got 16 days of global vehicle supply year over year. That's the most going all the way back to 2018.
Why is that? Is because people aren't interested?
That's the question.
This is what we've got to find out.
Is it competition? Is it price?
Right.
What is it?
Yeah, I don't know. And then you've got Lam Research, which is down almost 3% in the after hours. So this is, a semi-equipment maker, right? So it plays into the space. And we'll see how, when we all digest this and get up in the morning, how it all plays out. You're listening and watching Bloomberg Radio.
Connection lost.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Tape. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. Lots of earnings. We've got you covered. Right now, Tesla shares, they are bouncing around. Little changed. Right now, looking at a gain of roughly 0.3% on Tesla. It did report revenue and profit that topped analyst estimates. It missed on cash flow. Says the Cybertruck is on track for production this year, up by about 0.3%. Again, our coverage will continue on Tesla. IBM also out with earnings. It delivered an upbeat annual sales forecast. It also announced it will be eliminating about 1.5% of its global workforce. CSX reporting earnings per share for the fourth quarter that beat the average analyst estimate. Little change right now in shares of the railroad. Semiconductor maker Lam Research reported adjusted EPS for the second quarter that beat the average analyst estimate. Lam down now by just about 3%. We check the markets for you all day long here on Bloomberg Radio. Turned out to be an up day, an exciting finish for the Dow, up by just about 9 points. Little change, though. S&P also little changed on the day, down less than 1 point there. NASDAQ lower by 21, a decline of 0.2%. 10-year yield 3.44%, with the 2-year yielding 4.12%. Spot gold now at $19.46 the ounce, up by 0.5%. West Texas Intermediate crude also higher today, up by about 0.5%. WTI 80.50 a barrel. Bitcoin briefly up 0.2%. 22,956. Again, checking Tesla after hours, up now by about 0.6%. And that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Full transparency. Tim and I both have Aura rings. Tim has his on. I don't. I forgot to. I did take it off to do some chores.
You are supposed to take it off to take, when you're doing dishes and stuff.
I was doing something,
and
just
following the rules.
It was kind of a rough night. What?
You didn't have to take it off. It's
you
waterproof
don't?
up to 100 feet.
Yeah, see, and I wasn't diving this time around. All right, as you may know, it is a privately held company that we follow a lot. The current issue of Bloomberg Businessweek magazine, the Pursuit section, it's one of the sleep trackers profiled as part of a deep dive into the business of sleep, which we know, Tim, is big business, but we know this ring does a lot more than that.
Yeah, it does. Let's talk numbers here, though. Just last year, the market for sleep tracking devices was valued at $14.5 billion. It's projected to reach $61.2 billion by the year 2030.
It's a lot of stuff. All right, so let's get to our guest, Tom Hale. He was named CEO of Aura Ring last April. He was former chief operating officer at HomeAway. They were acquired by Expedia. He's an alum, too, of Adobe, Macromedia. He is in our Bloomberg Interactive Brokers studio. Welcome, welcome. Nice to have you here.
Thank you so much. It's great to be here.
So what's it been like?
Wow, it's been an incredible joy to learn. I mean, you think about sort of this particular product being the intersection of health, physiology, physics, fashion, right? I never saw myself as a purveyor of jewelry. Now I am.
Yeah,
and in technology, you think about what's going on in technology, where you've got AI processing huge amounts of data, and the intersection between health and technology is super interesting. So I've been climbing a huge learning curve, but that's been incredibly thrilling.
What have you learned the most? Is it that the size of the market, or the size of the interest, or what?
You know, I think it really is that there's a change underway, which is about how people are approaching health. I think COVID kind of took the covers off. Everyone felt a little bit secure about their health, and then COVID came along and reminded everybody that health is fragile and you need to monitor it and manage it, and everyone started thinking about it very differently. And so that change, that's a societal, maybe even a global change, and in some sense, health wearable steers right into it.
Okay, so Aura monitors health through the finger.
Yeah.
It's a ring that you wear on your finger. It tracks sleep, it tracks activity throughout the day. There are a handful of sensors on it. I'm wondering about the technology that goes into the ring, the hardware, but also what happens on the app, and sort of which one is, I don't know, where you're investing.
Well, you have to invest in both, of course. I mean, being the only smart ring on the market, we've actually got a lot of huge technical challenges that we have to manage, right? We have to make sure that the quality of the signal that we get is the highest and most accurate that is possible. Frankly, we are medical grade, you know, in terms of the accuracy of the device itself. Partially, that has to do with just the location of where you are measuring on the human body. As you said, doctors measure your pulse and your heartbeat and your SpO2 measure on the outside of your wrist. So we are just structurally advantaged in terms of accuracy. Now, that being said, We're a science-driven organization. So we take that super, super seriously. We validate everything, not just across like some small population, but across men, women, different ethnicities, different skin tones.
Right.
A lot of the technology is used for these kinds of wearable sensors is light-based. We shine lights into your body, and based on the signal that comes back, the refraction, the absorption, we're making conclusions about your heart rate, your respiration, your heart rate variability, these metrics that come back to you. Guess what? If you don't have the same tone in terms of skin color, the melanin in your skin absorbs that light differently. And so you have to be really thoughtful about how you measure. So accuracy, the form factor, these are structural advantages and structural things that we focus on around Aura. That's the hardware.
So how do you technologically account for a white person versus a black person versus how do you do it?
Well, you have to make sure, one, we're lucky because we measure on the inside of the palm, right? And the inside of the palm generally actually is a lot narrower range. Even people who have like sunburns or hair or tattoos or darker skin on the outside, they tend not to have sunburns or tattoos or hair on their palms. Maybe some people do, but most don't. So that's actually a structural advantage. But we do things like we monitor when the light signal goes in, what comes back, and we start to learn a little bit about like, do we have to increase the amplitude to get a good signal? Do we have to decrease the amplitude because we're getting too, like we're very intelligent about that. In fact, we did one of our big features last year was workout heart rate. You guys might have, I don't know, experienced it.
Yeah,
so
there's
it's
about
basically
5 different things that you can use it for.
It's super accurate in terms of like measuring your heart rate during a workout. It's accurate as a chest strap, which is kind of the gold standard for measuring your heart rate. All right, so when we were testing it, right before we shipped it, people were like, you know what? We want to make sure that we validated this across a wide range of skin tones. And so we actually did a lot of work to test on a wide range of skin tones, and we felt pretty good about it. We made some tweaks in terms of the power of the signal, the light signal that we send into the body. Right. But that kind of scientific validation is the key, and that's the hardware side.
The software side, though, gets a lot of updates. The app gets a lot of updates. And the reason I ask is because oftentimes with hardware, you see a brand new version each year.
If that.
If that. This year, you didn't see a new version of a ring with different sensors. You saw a different version in the, in a superficial sense. And I use the term superficial not in a pejorative way, but, with the idea that the sensors inside didn't change. Correct me if I'm wrong. But
that's correct. The sensor platform is the same. And by the way, we have 2 versions of the ring, right?
Yeah.
We have the Heritage and the Horizon. That's what you're talking about.
Exactly. Which sensors would you add right now if you could? Or is it kind of like where it needs to be and the work needs to be done on the app side, the analysis side?
Well, we're always looking at new technologies as they're emerging and new capabilities as they're emerging. A lot of people have sort of hypothesized that there are lots of things that you can do with new sensor technology. Really, I think the reality is that a lot of the ambitions here, like, we can test your blood glucose, non-invasively, are possible, but definitely further away than most people are willing to admit.
Elizabeth Holmes could do it.
No, she's all over it. I think that's her next project.
Too soon?
I know, it's not too soon. I don't know. But the thing is that you want to make sure those things are validated and accurate. The technology that goes into our ring today, some of it's very, very recent, very, very new. Some of it has been established. There's lots of science around it. So the reality is I don't know that we need to see huge updates in it. I think what's really important about the ring, from maybe different from your wrist, is that it's also comfortable and non-battery consumptive. I don't know if this has been your experience, right?
Exactly.
Every 5 days or so I give it a charge, every 4.5 days.
You don't have to think about it. You just don't have to think about it. It's just there, sort of silently in the background, keeping track of your metrics. The data is being processed, the algorithms are running, the recommendations and insights are coming through, and that's the software, right? The software is your health condition is different from your health condition. Let's understand that and give you the appropriate messages. That's personalization, that's machine learning, that's very different. I think the pace of software innovation, incredibly rapid, right? We're releasing 2-3 features a month because that's the pace of software. Hardware, you kind of want it to be stable because you don't want to change it all the time.
I agree. Who's your typical consumer?
Well, what would you guess? What would you guess?
I'm thinking like a guy in his 30s.
Guy in his 30s.
Looking at me.
What?
Sorry.
Kendall Roy from Succession.
Well, yeah, there was also the Billions where.
Well, did those? Can I just ask you before we get into the serious stuff? What does that stuff do for you? First of all, it's great recognition, but what does it do? Does it move the needle?
Well, funnily enough, when it used to be airtime, it would actually, you could see it, but it's not airtime now. It's all streaming on demand, right? But I think it just puts us in people's consideration. They now understand there is a smart ring category, and you can wear it. And if you're like the cast member of Billions, like maybe you want to be a little careful.
But that's what I was going to say. Is sometimes it's worn by somebody who's not necessarily a fan favorite, right?
Yeah.
You're not really sympathetic to Kendall Roy.
That's
does
right.
Does that bother you?
No. Look, I mean, what do they say? No bad PR. What is it when the Mr. Big, does he die on a Peloton? I can't remember.
Yes.
Spoiler.
Yes.
Well, maybe that's a bad example. Let's not go there.
It was not great.
Peloton hasn't been doing that well.
Well, yeah, let's hope he when the next one doesn't die. Anyway, my point is that all that stuff is positive, and all the halo around influencers, media personalities, CEOs. So Davos was crazy. It was lousy with Aura rings. It was crazy. So that's really powerful for us. But the reality is, I think most people, how they learn about it? They learn about it from a friend.
Well, we talk about, I feel like there's bonding. Like when you see somebody's on, it's like, it's just really, right?
There's a term you can use, but I won't say it on air.
What?
I can't say it.
Oh.
Yeah.
We'll have to talk about it later. I'm not sure what you're referring to.
No, I
Okay.
can't.
All right. We're going to come back with Tom Hale. Still got a ton of questions to ask him. I want to get back to, is it Tim? Is he the typical demo?
Well, actually, what's interesting is the typical demo is a perfect bell curve around the age 35 and equal male to female.
Okay. We're going to talk more about this. And we want to talk about growth in the business and where it's all going. Tom Hale, Chief Executive Officer of Aura, in our Bloomberg Interactive Broker studio. Our conversation will continue in just a moment. So you're part of the demo.
I'm part of the demo. Yeah, I'm honoring my sleep as long as I'm above 75. I'm happy. In the meantime, let's get a check on the latest world and national news. Nancy Lyons is in the 99.1 newsroom in Washington, D.C. Hey, Nance.
Thanks, Tim. President Biden says the U.S. will be sending more than 31 of its best tanks, the M1A2 Abrams, to Ukraine to help it defend against Russian aggression.
The Abrams tanks are the most capable tanks in the world. They're also extremely complex to operate and maintain. So we're also giving Ukraine the parts and equipment necessary to effectively sustain these tanks on the battlefield.
Biden says delivery of the tanks would take some time, but he did not say how long. Federal Reserve Vice Chair Lael Brainerd is said to be the front runner to become the head of the White House National Economic Council. Bloomberg's Amy Morris has the story.
President Biden hasn't made a final decision, but he is close to filling the role being vacated by Brian Deese. Other candidates include Commerce Secretary Gina Raimondo, Deputy Treasury Secretary Wally Adeyemo, and Biden advisor Gene Sperling. If Brainerd is appointed, it would open a slot on the Fed's 7-member board as policymakers are debating how much more to raise interest rates. Biden would also need to find a successor who could win the backing of the Senate. In Washington, I'm Amy Morris, Bloomberg Radio.
Authorities in Memphis say a federal civil rights investigation is underway to look into the death of Tyree Nichols, who died following an altercation with police during a traffic stop. Nichols died a few days after the incident. The 5 officers who were involved in that have all been fired for using excessive force. Kevin Ritz is the U.S. Attorney for the Western District of Tennessee.
Our federal investigation may take some time. These things often do. But we will be diligent and we will make decisions based on the facts and the law.
Attorney Kevin Ritz, an independent autopsy showed Nichols died from excessive bleeding after being severely beaten. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Tape. This is a Bloomberg Business Flash.
It's 4:41 on Wall Street. I'm Charlie Pellet. We check the markets all day long on Bloomberg. Lots of news after the close of trading. We begin with Chevron. It is raising its dividend for the 36th consecutive year and also announcing a $75 billion buyback program following record quarterly profits in 2022. After hours, we've got Chevron up now by roughly 1.8%. Tesla reported better than expected profit in the latest quarter, signaling strength as it faces growing questions about car buyer demand for its all-electric vehicle lineup. After hours, shares of Tesla down by 0.6%. Ross Gerber is the CEO at Gerber Kawasaki Wealth Management, and he spoke with us on Bloomberg Television and Radio all about Tesla.
If you look at the numbers, they're now saying that both Berlin and Austin are up to 250,000 cars, so that's 5,000 cars a week. So that's also a piece of news that they were at about 3,000 cars a week. So they've gotten up to production levels that are scalable now in both Berlin and Austin, and I think that is really exciting. So when you really look out over the next year or two for Tesla, they have an amazing ramp business. It's quite amazing.
Also after the bell, IBM delivered an upbeat annual sales forecast while announcing it will eliminate about 1.5% of its global workforce. After hours, IBM down by about 0.4%. Turned out to be a mixed day. What a day. What a finish for the Dow, up by 9 points today, up less than 0.1%. The key takeaway, little changed after an up and down session here. S&P down less than a point. NASDAQ today down 21, a drop there of 0.2%. 10-year yield 3.44%. Spot gold 19.46 the ounce, up 0.5. West Texas Intermediate crude up 0.4%, 80.42 a barrel. So what about the market backdrop? Jimmy Lee, CEO at Wealth Consulting Group. He was our guest right here on Bloomberg Business Week.
I think what we are going through now is a shift from just a few weeks ago, from a lot more of the pundits believing that we're definitely going to be in a recession in 2023, and it's just not knowing how deep it's going to be, to where I think a lot of those bears have turned more bullish, thinking that we may actually avoid a recession.
And again, 10-year yield 3.44%. S&P little change today, down less than 1 point. Tesla after hours down after earnings, down 0.4%. And that's a Bloomberg Business Flash.
All right, Charlie, thank you so much. I want to get back to our guest. Tom Hale still with us, Chief Executive Officer of Aura, still in our Interactive Brokers studio. So we're talking about your demo. So just let's go back there. So your typical buyer, I hate to say that, your average buyer of an Aura ring is who?
Yeah, it's actually a perfect bell curve on either side of age 35, and so you see, folks who are aging in place who want to manage their health, people who have chronic illnesses who are trying to make sure they don't get sick. You have 30-year-old athletes who are training for their marathon or their 10K. You have 20-year-olds who are women who are just coming to maturity and want to manage their contraception using non-hormonal contraception. You've got young kids, 15-year-olds who are training for the first time and thinking about recovery and how to do it. So it's a pretty broad span. Health, of course, is a money-killer beast. People are having different health situations as they move through their life.
Is that what's really driving people to ultimately get it?
It's about 50-50, sleep and health. So people who are, honestly, I think as you get older, sleep becomes this thing. And if you're a woman or a man in a certain age, like sleep becomes really important.
Yeah.
Kids are out of the nest. So sleep is really a big driver. And the thing is like sleep is this habit that everybody does, but no one's particularly good at.
Yeah.
Right? And when you lose sleep, wow, you feel it, right?
Yeah. Preaching to the choir, looking at Carol right there.
Yeah, sleep is this.
I'm told.
I was just reading that they say there's something that goes on with your brain as you get older that affects your ability to kind of stay asleep throughout the night.
Lots of things change, right? Pressures of life, stress, all sorts of things. So sleep.
So, okay, talk about the scores here, because that's mainly what I look at on the app. When I wake up in the morning to see how I slept. What do you aim for? What should people be sleeping?
Well, I think this is the things that everybody's health situation is a little bit different. Really what you're looking at is your baseline. Again, medicine has been practiced for years on the averages, and the truth is that we're all different. And in fact, not only are we different, but we're also constantly changing. So the metrics that go into those three scores, and the three scores for clarity are sleep, activity, and readiness. And sleep is really like How well did you sleep? And it really understands a lot. Like, how quickly did you fall asleep? How much disturbances did you have? How many times did you move around? How many times did you wake up? Did you fall asleep quickly? Did you fall asleep within your normal bedtime? All these things are factors, and we come up with one score, and that score is like somewhere between 0 and 100. Very few people get 100. Some people do. Most people, if you look at the bell curve, probably distributed between 70 and 85.
Oh,
so
wow.
if you're in that
85
range,
is great.
you're pretty good, right?
Do you get that?
I go for 75 or up.
Yeah.
But it's not easy.
I'm not always good. I'm not great.
And duration, by the way, is a really important factor, right? But it's not the only factor.
When it comes to the data dump, if you will, there is a point where, it gets to be a lot. How do you make sure that you're giving people smart information, enough information? Like, what's the balance there? How do you think about
critical.
that?
Well, I think we think about it as most people just want to check how they deviated from their baseline. And that's actually one of the things that the software does. It learns you, kind of learns your patterns, and then sort of says, whoa, this is a deviation from that pattern, so maybe something's going on. And the software kind of says, maybe you should take a rest. You're not looking so good today. Did you have something to drink last night? It's like, and that kind of like supportive approach is really different. It's really unique in the wearable space,
right?
Because we're not saying get your 10,000 steps whether you like it or not, or whether you feel up to it or not. It's like we actually adjust.
To it.
Our activity score adjusts. We actually, the activity goal we set adjusts based on your readiness or your sleep.
Okay, let's talk numbers here.
Yeah, let's talk about the business.
Yeah, I want to hear about the business. So, you can buy one of these rings, $349, $299. That's a one-time revenue hit for you guys.
Yeah.
But then there's the membership.
Yeah.
$6 a month.
Yeah.
Do you need to have the membership in order to get to use the ring?
No is the answer. But I think one of the things that we think a lot about is that your health really is priceless, and actually the algorithms and the processing and the R&D that we do that looks at your data, it becomes more valuable over time, right? It's not just, did you get your steps in today? And by the way, once you've figured out what 10,000 steps looks like, do you really need to be told you got 999?
The other thing that I'm curious about is how many people churn?
Yeah.
People who buy them and keep them on. Because wearables are just known for people throwing them in a drawer.
So can't give you all the data.
I call it device fatigue.
Exactly.
Device fatigue. And I think that's where the software comes in, because we think about not only is your data changing, right? Because let's put it, for example, a lot of people get sick and the ring tells them, hey, listen, you look like you might want to go into rest mode. And the app reconfigures itself around you being sick. The activity score goes away. The advice changes. The tone changes. It goes from being like, go for it, to be like, take a break. And that customization, that experience is different because your health condition has changed. All right, so that idea that your health condition is changing all the time and the way the app configures, that's value over time.
It did this to me when I got COVID. It realized that I had COVID.
Right.
It was like crazy sleep and stuff, to elevated body temperature, and it's, asked if I wanted to switch into rest mode. You didn't answer my question about how many people keep the ring on.
Yeah, so two facts that I could share. So one is the average wear time. So if you look at the mean wear time over a 24-hour period, the average mean, about 22 hours and 30 minutes. Okay, that's the mean. When you look at the median, it's actually 23 hours and 30 minutes.
Right.
So what does that mean?
That means half above, half below.
Exactly. So that means most people are wearing it more than 23 hours.
But I guess when somebody puts the ring on, do they keep it on for 12 months? Do they keep it on for 2 years?
So this is the second stat. The second stat is after 52 weeks, we have 88% of the people still engaged with the app. Now, that is shocking because, as you said, in the wearable world, the typical thing is you get the wearable, you try it on, you get some value, and you throw it in the drawer because you figured it out or you have to charge it.
All right, so how much is the business growing? You're private, but give us some metrics.
Can't tell you. We're not breaking that out.
Are you growing?
I think, we are in hyper growth. That would be the phrase that I would use.
Above 50% year over year?
I'm making a face. You can't see it on, well, maybe you can, but no, we're growing incredibly quickly. And honestly,
you are profitable?
In a down market, we are investing.
You're investing?
We're investing.
Will you go public?
I think we're building the business, and we want to build a big business. And honestly, having been in public companies, I'm not in any rush to go public. I want to make sure we're set up right.
You need to raise any more money?
No, we're probably set. Maybe even to a public event. We might see one more round.
Even to a public event?
Yeah.
Yeah.
Okay.
Oh, so it could be a consideration.
But You did not hear it here.
I actually did.
And going it alone
We
is
have no
okay?
plans. Let me put it this way. To be explicit, we have no plans to go public.
I mean, could an Apple, has Apple come out to you?
This was asked recently, I think maybe by a colleague of yours, and I said, when Tim calls, I'm going to pick up the phone, but he hasn't called yet.
All right, this was a lot of fun. Come back soon.
Love it.
Okay,
Will do.
Tom Hale, Chief Executive Officer of Aura, of course, here in our interactive broker studio. You are listening and watching Bloomberg Business Week. Carol Master, Tim Stenovic, and this is Bloomberg.
company news headlines on Bloomberg Radio.
It is 4:53 on Wall Street from Bloomberg World Headquarters. I'm Charlie Pellet. We're keeping an eye on Tesla shares after ours. Tesla shares, they're basically swinging between gains and losses. Little changed after ours right now on Tesla, down by about 0.3%. Did report better than expected profits in the latest quarter, signaling strength as it faces growing questions about car buyer demand for its all-electric vehicle lineup. IBM out with an upbeat annual sales forecast, while announcing it will eliminate about 1.5% of its global workforce following similar job cuts in the past few months by many of its technology peers. Chevron raising its dividend for the 36th consecutive year. It also announced a $75 billion buyback program following record quarterly profits in 2022. Also, today, CSX reporting earnings per share for the fourth quarter that did beat the average analyst estimate. Little changed after hours in the railroad CSX. Semiconductor maker Lam Research reported adjusted earnings per share for the second quarter that beat the average analyst estimate, down by roughly 3% after hours. And Boeing reported a surprise loss to end 2022, its sixth straight money-losing quarter, as higher costs slowed the plane maker's recovery, even though a late flurry of jet deliveries drove a surge in cash. Today we have Boeing shares up by about 0.3%. And those are the company stories we're following this hour. I'm Charlie Pellet, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
It is Bloomberg Business Week. Let's get a check on the latest world and national news. For that, we go to Nancy Lyons in the 99.1 newsroom in Washington, D.C. Hey, Nance.
Thanks, Tim. Well, the U.S. will be sending Ukraine 31 of its M1 Abrams battle tanks in hopes of pushing back Russian forces. Germany is also committing to sending an initial batch of its Leopard 2 tanks. White House National Security spokesman John Kirby says it'll help Ukraine's with its ever-changing strategic objectives.
What this decision does do is show that how unified we are with our allies and partners, and doing all of this in a coordinated way.
Kirby says there's a lot of training needed to operate the Abrams tanks, so it may take a while before they're on the battlefield. House leaders were planning to put a bill on the floor that would expel migrants at the border, but some Republicans objected to a blanket bar on asylum claims. Bloomberg's Irv Chapman with more.
Majority Leader Steve Scalise said there will be a bill eventually.
We're going to be doing a big border security package. You'll actually be able to see members in the committee room working through these complicated issues and ultimately bringing bills to the floor.
Which means Democrats will have input. Caucus Chairman Pete Aguiar.
We're not going to support policies that dramatically gut our asylum process that has been in existence for decades.
So the Republicans brought up a bill instead to overturn Biden policy on the Strategic Petroleum Reserve. In Washington, Irv Chapman, Bloomberg Radio.
The teacher who was shot by a 6-year-old in a Virginia classroom is suing the Newport News School District. Her attorney, Diane Toscano, says administrators were warned that the child had a gun, but did nothing.
What did administrators do? Did administrators call the police? No. Did administrators lock down the school? No. Did the administrators evacuate the building? No. Did they confront the student? No.
Toscano says administrators were warned 3 times over several hours that the boy had a gun. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. Back to you, Carol and Tim.
Hey, Nancy, thank you so much for that update. Really do appreciate it. Bloomberg Business Week is brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds. The ERC isn't alone. It's money your small to medium-sized business may be eligible to receive for keeping employees on payroll in 2020 and 2021. Get an estimate of your company's potential refund today. Learn more at getrefunds.com.
All right, coming up in just a few minutes is Bloomberg Sound On with host Joe Matthew, joining us right now from the nation's capital. A little birdie told me that you're going to be talking a little bit about energy today.
So think the price of oil here. There were questions today about whether it goes back to $100 a barrel this year, right? Is that in your crystal ball?
Well,
my crystal ball's a little foggy.
I will say that we've had some analysts on who say, you know what, this fossil fuel, it's going to be with us for a long time, guys.
Well, that's right. And Republicans want the president to stop playing with the Strategic Petroleum Reserve. And they're going to vote tomorrow on legislation that would put restrictions on that. It would tie drawdowns, in fact, if he wanted to do it again, for greater fossil fuel development on federal lands. So there's a huge question about what to do here. Now, the White House says Republicans would then be responsible for higher gas prices because they won't have the ability to keep releasing these barrels to balance out the market.
Do oil companies even want to do that, though?
That's a great question. They're not involved in this conversation as usual.
But they're the ones who are going to have to do the drilling.
They've seen a lot of boom and bust cycles, man. They are going to be slow to invest.
It's a great point. And that, listen, reality, in the field like that is not always in the level of awareness here in Washington. But it's a great talking point right now. The White House is already threatening to veto this bill if it gets passed. So this is going to be emerging as the latest sort of battleground this week in Washington.
Joe, you know what Chevron's doing with its money?
No, tell me.
$75 billion in a stock buyback program.
Also, the White House loves that kind of
36th consecutive year.
I thought Joe Biden said stop doing that.
It's not drill, baby, drill. I'm just going to tell you. All right.